Well, with that, we'll move on now to our next conversation. And the company that we're putting the spotlight on is Patanjali Foods. The stock has seen a pretty good run-up in the last 3 months. The company also held an analyst meet recently in which it set a group turnover target of 45,000 crores for FY24. Sanjeev Asthana, Chief Executive Officer at Patanjali, is joining in to talk about these plans, the target and the business outlook. Mr. Asthana, thank you for joining in. Season's greetings to you. So big targets there for the fiscal that will end out. 45,000 crore group turnover is what you're looking at. So tell us, what do you think will drive it? And give us a specific outlook on the edible oils business. How are your volumes shaping up there? And how much of this growth, this turnover, group turnover, will actually come in from the oils business? How much would be FMCG? Give us a breakup of the numbers as you see them.
Sure. So greetings to everyone at the CNBC-TV18. There are two sort of paths to the strategy that we have right now. One is we are pushing for increased turnover of the FMCG businesses, which is getting driven largely around the foods vertical at a group level, the non-food FMCG, the Ayurvedic medicines business, and there are a range of other businesses that the company runs, which includes dairy and a couple of similar adjacencies that we have in the businesses. The second part of the strategy is to continue and maintain the profitability in the edible oil business. So the target is not so much on revenue, but on running a profitable growth. So last quarter, we had done in the first half of this fiscal, nearly 28% of our business in Patanjali Foods side, which is a listed entity, was about 28% was FMCG. And the sort of the edible oil portion of it was about balance 72%. So the overall estimation is that, the edible oil prices are a big indicator of how much the revenue one will earn. So per unit value per ton is a big number which derives really in terms of the revenue side. We don't look much at it. Our volumes have grown about 28% last year, which is significantly higher than with the way country has grown. We expect this to sort of taper off closer to a regular run rate of between 4 and 6% on the edible oil side. Our foods FMCG businesses will typically tend to grow at about 15 to 16%. So the net estimation is that Patanjali Foods side, the listed entity, again, I'm repeating, should be closer to about 36 to 38,000 crores next year. And at a group level, certainly we should be closer to 45,000 crores plus as we close the year.
Okay. Getting back to the point about profitability, for the edible oil business, what is the outlook that you have for edible oil prices? Because prices have halved. Have you exhausted all your, high-priced inventory? When can you get back to those margins of 3 to 4% for the edible oil business?
So edible oil business, as you know, in last 4 quarters has had an extremely difficult time for most companies, and in fact, even the world at large. I think that is behind us. So this quarter, we should be reasonably better in edible oils in terms of the margin. Next quarter, we should be pretty much on a regular run rate. So I think even while the prices have halved, the profit margins have returned because the scale at which it slid has certainly tapered off. And I think the market is also ready to pay, for the value. The demand is back again in a quite a robust way. So my anticipation is that the imports in India will grow at between 3 to 5% this year. Our numbers this quarter, 6% plus is the growth we are expecting on the revenue side. And our margin construct between 2 and 4%, we should be pretty much back to the old ways of margin on the edible oil side.
2 to 4% for the full year or for Q4?
For Q3 and Q4.
Q3, Q4.
Mr. Asthana, good morning, sir. I understand you're not been keeping well, so just want to thank you for making the effort and being with us here this morning. Appreciate it. Prashant, this size and season's greetings, sir. Just a quick word on the foods business, which I think now is just under 30% of sales. Could you, what's the roadmap? By when do you, that business will keep growing? By when do you reach the 50% share, sir? Because that is what a lot of the street is excited about.
So we had, Prashant, already sort of declared that the roadmap was 5 years. In fact, we have moved way faster on that trajectory. So my estimation is that while we'll maintain the 5 years as a number, that our revenue of edible oil and the FMCG should be 50-50. But broadly, my estimation is that we would be able to surprise the street, probably that this number we could achieve faster, with a lot of sort of work which is going on right now. In expanding our foods portfolio, our Nutrela, we're expanding the categories by adding a lot more, sort of making it to an umbrella brand and launching new products in that. And likewise, under the category of biscuits, our growth has been scorching. We're growing at 20% plus year on year. So our estimation overall is that we should be able to achieve this probably in between 3 and 4 years' time. With the addition of new categories and the organic growth that we are seeing in the businesses.
And margins in the food business, Mr. Asthana, what will it be on a steady state basis as you see it?
So a steady state basis, we have maintained that it should be 15 to 16% is what we estimate the margins would do. Because clearly it's a blend of, the categories, which typically some of them are very high margin categories and some of them are not as high. So on a blended basis, on the FMCG, we should be between 15 and 16%.
So, Mr. Asthana, we've discussed a lot about the business plans and how you're looking at growing all the verticals. Let's talk about the investments as well then. What is the outlook for the remaining part of 24, and as you're looking at plans for FY25? I believe the cash on books is around 2,000 crores. So just help us understand the investment thought process for the new year.
So we're fairly comfortable. On the balance sheet, the cash is closer to 3,500 crores. And, in terms of the need for CapEx, the requirements are fairly minimal. So, other than the regular run rate of maintenance CapEx of between 100 to 150 crores a year, we don't need any large-scale investments at this point of time. In year 25-26 and partially 26-27, we would require about 1,500 crores of investments, on which I think our free cash flows are fairly supportive. So I'm not anticipating any fresh requirement of funds really to, fund any of the CapExes that we have targeted right now.
So the targeted CapEx is 1,500 crore in the next 2 years, right?
Year three and year 4. The palm plantation business will come into fruition when we have to start putting the capacities for processing. Otherwise, our CapEx required, we've got ample capacity to process edible oils in the foods business. There's enough and more requirements. So it's just a routine maintenance CapEx that we spend right now. And the basics in the oil palm.
We are talking about 3 years, 4 years down the line. Are you looking at some point of time demerging the FMCG food business and the oil business, the edible oil business?
So this gets discussed very often, and very clearly, the view from the investing community is that this oil business is not supportive of a large FMCG business. Where the view we have sort of explained repeatedly to investors is that the edible oil business on a margin basis looks low, but on return on equity, it's a very good business. So if once we get back into 3 to 4% margin each time, and are able to rotate the capital, about 5 to 6 times a year, it's a pretty much return on capital of about 15 to 18%, which is a very attractive business to be in. So right now, while the discussion keeps happening at multiple levels, but there is no plan to really remove the edible oil business from the company's portfolio or demerge it.
Okay, all right, Mr. Asthana, we'll leave it there. Thank you very much, sir. Great speaking with you here on CNBC-TV18. Good luck as we look into 2024. And once again, thank you for making it today. So that's Patanjali Foods with a quick check on the business. Well, with the